Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market recap for the week ending September 21st, 2018. Just a quick synopsis of the week. Corn up approximately 6 cents. Beans, as far as the grain markets are concerned, up the most, up around 20 cents. Wheat up around a dime. If we look back to the values on the close today versus where we were going into the September 12th crop report, which was 7 trading days ago, corn's actually down 7 cents since that report. Obviously kind of a bearish report. Beans are up a nickel and wheat's down 5 cents. So since that report, we've seen a lot of gravitation, some major sell-offs into the early part of this week, and in the tail end of this week, especially Wednesday, Thursday, Friday, we've seen a pretty good correction coming off the contract lows in the corn and the beans. Now keep in mind, in the commitment to traders report that was released today, which is as of Tuesday's close, so since then we've seen a retracement. The previous week, the funds added 78,000 contracts to their corn short, making that total short 141,000 contracts. My guess is that's a little larger than the trade was anticipating on the report tonight. This may help explain the short covering rally we've seen the last 2-3 days in the corn. At same time in the beans, funds only added 1,000 contracts, or a little over 1,000 contracts in shorts, building that short to 69,000 contracts. So on the other side of the coin, I'm not sure the trade was expecting a short in the beans to be that small of a change. Now, the bounces we've seen this week, especially on Thursday with beans up approximately 20 cents at one point. Keep in mind we got air pockets in this market. If you get a big move on the upside due to volume, there's not a lot of resting hedge or sales paper in this marketplace right now, so it's almost like it's in a vacuum. Thus it's easier to see this market move a little bit in that fashion short term than what we've seen. And when you look at Nove Bean today, closing up near what I would call resistance at 850, especially on a close, it's a far cry from where we were on Tuesday or Wednesday of this week, where we made new contract lows. Large yields, question marks on demand, record low basis, I still think can weigh in this bean market going forward, so it's hard to get very excited on the beans. Corn harvest continues to progress rapidly in some areas. Some customers in central Illinois would tell you they're, give or take, half done with corn harvest, but on the other side of the coin, we've got areas, especially in the northern or northwestern part of the corn belt, that have barely, if turned a wheel at all at this point, and have seen a lot of moisture or a lot of rain over the last several days. So we're going to see some areas that, at least for a while, look to be delayed. Hopefully, in most cases, we're not seeing some regression in production in some of those areas. Corn side, that's where we are with harvest. Still trying to get a feel on the supply and the yield side, but demand continues to feel solid going forward in the corn, both domestically here in the U.S. and from a world stock standpoint. Cash markets, at this point, elevators that are seeing harvest activity, both corn and beans, are seeing very little movement, very little producer selling. There was a fair amount of new crop selling earlier in the calendar year. Some of that's being delivered, but anything fresh across the scales right now is typically going into some type of a storage program. We sent an email out earlier in the week on corn talking about, since the summer of 2014, so a little over 4 years ago, the number of weeks corn is traded above $4 on a closing basis is 13 weeks. So have this in mind with December of 2019 futures not terribly far from $4. Person may want to be forward thinking, looking at locking in a little bit of that 2019 corn, being patient with it, but looking at values and open orders in the futures market, something above $4, and call and visit with the office on that, a little more detail if you'd like. The same point, we would look at some option strategies both in corn and beans if you're trying to look at some opportunities that way. The other thing we would mention or caution folks of is kind of be careful in this type of market environment where the market's a little depressed and all that. Been in this business a while, and this is the ingredients where you tend to see some creative cash contracts out in the country. If you see any of those and you'd want to chat about it with us, just to get another opinion, please feel free to give us a call. As far as on the livestock side, in hogs, first of all, the African swine flu story. This has been out over the last month or so. Continue to keep monitoring eye on that situation. That could continue to be a talking point, not only for the hogs, but protein demand in the world, etc. So keep that in mind. Secondly, cattle on feed report tonight. As for August, on feed 105.9, pretty much in line with what the trade was anticipating. The placement number again was larger than trade anticipated, 107.4, about 3% higher than trade anticipated. Now here in Iowa, placement number was more like 89 or 90%, and then on marketing's at 100.2%. So if you have any questions on any of these markets or any of these things we visited about, feel free to call us here in Cedar Rapids. Phone number is 800-373-2525, or catch us on the web at BIScommodities.com. With that, everyone, have a great weekend.